Hey, good morning, everybody. Today's Saturday, March the 26th, and I have a special guest today, my partner in crime here at Trade Genius. I have Phil Clever on with me, and we're going to talk Trade Genius, macro view of the world here, crypto, and then kind of looking down the road here a little bit. And first of all, Phil, say hello to everybody.
Hello, everybody. How's it going?
Good. So let me just back up. I know we've just been doing these now for about a week or so, and everybody was asking, "Hey, what happened to us, guys? Why did we stop doing videos and things of that nature?" And part of it was, with the pandemic, our business got, I think, just crazy busy. And at the same time, there's just a lot of just turmoil in general, and we just made a decision that we're best served, focusing on our client base and just trying to just actually come out with some new and additional products and services and algorithms, and we kind of went through that cycle, and now we think we're prepared pretty well here going into the next 2 to 3 years with algorithms, and now with I think we have a better sense of the macro picture. We think we can now communicate more to people what's going on, and then also we were just asked to do podcasts. We've been invited to join a podcasting service, and so the first ones we've done here, I just did audio only, and testing out some new technology here, and then now we're going to try to do things with sharing screens, and Phil and I are going to try to do these more often, and just quick thumbnail background on Phil is that he's more than just a crypto guy in our business. Phil is an accomplished futures trader, and also that he is he's a master in Forex trades, but he does it through binary options. And so he has a massive database that gives high probability trades. And so in the future, when we do this, Phil's going to talk not only crypto, but he's also going to talk the futures markets. He's also going to talk Forex and binary options. And the last thing to do too here, just to plug Phil, is that if any of you guys that trade crypto and are looking to get some personal coaching, I encourage you to Phil's available to do coaching, and you can just have to contact Matt over at tradegenius101@gmail.com. He can let you know how much those things will cost to do private coaching or to do and participate in some group training that Phil does, and he's well worth the money. So I encourage you to check that out. And with no further ado here, I wanted to bring Phil back on, and Phil, kind of now that we've got 2022 kind of in motion here, I think we're starting to see some macro trends, and I wanted to just get your perspective on things in general and how crypto is tying into some of this stuff, and how you see kind of the rest of the year kind of playing out, or if that's too far of a horizon, next 3 to 4 months.
Yeah, sure. So I think, a lot of people going into the end of 2021 into 2022, which is typically like a very bullish part of the halving cycle, right? I firmly believe that Bitcoin is most reliable when you look at it in terms of the halving cycle and forecasting like what its macro dips and macro peaks are going to be. And quite simply, when you look at the halving dates that Bitcoin basically, and if you don't know what a halving is, basically Bitcoin cuts its production in half from its daily output. So previous halving, we were outputting 1,800 BTC per day, and that was just basically because that's what the miners get as compensation for confirming transactions on the network. So went from 1,800 BTC being produced a day from mining rewards down to 900. And then in 2024 and roughly about March or so, depends, but based on how fast blocks are solved on average, probably around March, maybe April of 2024, we'd be looking now then going from 900 to 450 per day. So you have this disinflationary mechanism built into Bitcoin, and that happens on those halving dates. And what ends up happening is you get a bottom in the price of Bitcoin, typically somewhere between 400 to maybe 500 days in front of that. So in our current situation, that would mean about October or November of this year, we should see the bottom in on this cycle. So that's been historically what's happened. And then macro bottom. And so then we expect price to have the lows in, barring any sort of outside event. Like this last time we had COVID that kind of came in after that timing and created another dip, right? But recovered quickly. And then those forces ended up playing out. And then when you get that bottom before the halving, if you look at price, so let's just say if the bottom came in at like 450 days prior to the halving date, you can kind of look at that as like where the cycle will peak out. Now, it's not exact science, but roughly speaking, that's what happens. So basically what ends up happening is timing wise, that's been very reliable for peaks. Now, people thought we were going to go to six figures and beyond. And, I felt that was pretty doable given the way that Bitcoin moves. But instead, we had kind of a double top on the price of Bitcoin. And so I think that kind of threw people maybe off a little bit as far as expecting Bitcoin to move higher. So now we're in this post-halving peak environment, which has been par for the course with previous cycles. And so now it comes down to, is this going to be kind of a truncated bear cycle where, maybe we don't see a bear market as long as the previous last two retail cycles, and the lows are already in and we start grinding higher. I mean, that's certainly possible. The first two cycles were retail driven, right? So you had more of a boom bust aspect to it. And that's where like a lot of the critics were saying, Bitcoin's kind of like, to the tulip boom and bust. And to a degree, I mean, that was the case, although it wasn't like, forever for Bitcoin. These were just like hyper inflationary cycles, basically because of just, it was largely just retail. So if retail's into something, you do get that sharp rise in value and then the sharp drop off. But now we're going into this phase where we have, institutional size money coming in now. And so you see pension funds starting to get involved. You see large corporations adding Bitcoin to their treasury. And now you're starting to see countries, add BTC to their balance sheet, right? Like El Salvador. And you're probably going to see other smaller countries follow. And I think when something that we've talked about for a long time, way back when it didn't even seem probable, would be maybe a smaller central bank, like a G20 central bank, recognizing Bitcoin as a legitimate reserve asset to have on their balance sheet. So I think when you see probably that last part happen, I think you're going to really see Bitcoin take off. The other thing too is the ETF age of any commodity or asset. And if you look at gold, long-term charts of gold, it had similar price structure to Bitcoin, where you had this like run up and then steep drop off. But one thing that happened with gold, I think is going to be similar going forward, is when the ETFs for gold were introduced. This was back in like 2003. I think Australia was first to the market with it. And then 2004, the US followed suit. And if you look at the chart, you can look at a weekly chart when that happened, that really kicked off like a decade-long run for Bitcoin and took off, not Bitcoin, gold. Gold ETFs were introduced, decade-long run for gold, and ran up to like $2,000+. And that was all through even the '08 crash and everything like that. and peaked out around 2011 or so. And I think we're going to see something similar with Bitcoin, because really what that means when ETFs get into the picture is that institutional money is there. So you're having just more of a broader acceptance of Bitcoin in people's portfolios. So I think that's probably going to have us, instead of these boom bust cycles that we've had with past retail driven cycles, now at the institutional phase here, I think we're going to see a more sustained rally, and the drawdowns are going to be less. And so I think that'll be the big difference. And I think I see a lot of comparisons to the last two cycles, which, looked pretty similar in structure. And I think this one's going to be different. So it's hard to take comparisons from those last two cycles. It's a small sample size of two. So I think you have to look at other things that may have gone through the same type of growing pains. And I think gold is a good example of that, because this is gold 2.0. I mean, that's basically the accepted role for Bitcoin right now. So I think that I have a hunch, anything's possible, but I have a hunch that's what's going to play out. And the typical structures of the last couple of cycles we won't see that going forward.
Hey, Phil. So a lot of people also that were calling for the moon, and we've been pretty tempered, because you do only price pays, and you just have to follow the action. But a lot of people also thought that Bitcoin would be the trade, when the stock market went under stress. Can you kind of help people understand, maybe the true role of Bitcoin in context to that assertion?
I'm sorry, Bobby, you broke up. One more time.
Yeah, a lot of people thought Bitcoin would go to the moon here if the stock market crashed as a safety trade. Mm-hmm. And, it's the same people that thought, Bitcoin was just going to shoot to the moon,
Gotcha.
At any rate. And could you maybe explain why that assumption was kind of maybe a false assumption as to the role of Bitcoin and how liquidity works in this environment?
Well, I think part of that was looking at the previous two cycles, right? And I think the disinflationary mechanism of the halving is eventually going to win out. And, you're going to have something that is going to only have 450 units produced per day into global demand. It's just not, it's a simple supply and demand calculation. So I think that ultimately plays out. However, I think people are expecting, basically that's a supply shock mechanism. And I think people are looking for that to happen. It's just, I think it takes longer than people realize for it to finally manifest. But once it does manifest, it's gone and it's never coming back down. So, but I think the thing also that's playing a factor is I think people thought it would become a completely non-correlated asset to, let's say, the stock market, right? And lately, it's been more of a risk-on asset, so it's correlating with the stock market. Now, there's different correlation models that show when it's more or less correlated, but for me, looking at price action most every day, it just acts more like a risk-on type asset right now. So I think if it does decouple, and I think it will decouple at some point, I think that's when you're going to really see that expectation of these triple or six-figure valuations for Bitcoin come to fruition. It right now, like if you look at what happened with the conflict in Ukraine and what happened with different things, like gold spiked, right? So that continued to be the risk-off asset play, and equities dumped, and Bitcoin got dragged now with that to an extent. So going under 40K, and then as the equities rebounded, so did Bitcoin, and then gold dropped back off. So it's not. It's going to. I think it's not really going to ever correlate over time with equities and or gold I think it's just going to do its own thing, and I think the supply demand mechanism is going to be the large driver of that. Ultimately, that wins out how it behaves. But to answer your question, I think it was just a matter of people are looking for the supply shock to come, and even though it might seem like everything's lining up for it, in reality, it just takes time for these things to play out. You still have a couple million BTC that are circulating on exchanges that need to be absorbed. And so like, even when you have large entities that say, okay, we're going to acquire like billions of dollars of Bitcoin. I mean, the market can still absorb that sort of accumulation, and doesn't create like this huge, massive spike in price. More driver of that right now is just leverage. And so when there's too much short interest, you get these short squeezes, and, you'll see Bitcoin go on a tear, go up 5, 6, $8,000. That's more a function of leverage and things like that. But when you see a sustained, I think the change will be when you see a sustained rally, let's say after a halving peak, and then you get like maybe only a 30% drawdown or something like that, and then continues to just keep riding up. There's no more of this 50 to 80% drawdown base for months, couple of higher lows or lower highs, I should say. And then, it takes the better part of 12 months to play out, and then starts to grind back up. I think when you see that depart from that previous cycle structure, and you have more shallow pullbacks and a more sustained, like over the course of 12 to 18 months, a more sustained series of higher lows, then I think you have like basically your green light that the things have changed. The demand drive from the larger money is here, and that's going to create that gold-like move post ETF introduction.
Yeah, what has struck me is that I see the volatility is really tailed off. We have this chart up here now. I threw a weekly up there just to give people broad perspective, but it looks like an incredible consolidation happening here in the in the range between 30 and 60K. And I mean, looking at the picture here, on our chart here, where this is the weekly starting to break up over the the moving volume weighted average price, and so we're getting some continuation higher lows here. Then I expect this another move up to that big resistance band back up into the low 60s here again. If you notice on the bottom, that's money flow, and as price was falling, money flow was starting to accumulate. So, and we also made a higher low from the trade from the summer of 2021. So, I kind of see what you're talking about there is that the basically the teenager spikes are leaving, and we're starting to get a more mature move. And, also for people to understand, gold sometimes correlates with the dollar and with liquidity, and gold sometimes is a risk-off asset. So we're just trying to understand how people are viewing Bitcoin over time. And I'd like you to opine on this, Phil, is that, because you see a lot of the deep data on this, is are we still in a low float situation where strong hands are still getting stronger, and basically the incremental coins that are traded are have to start becoming more aggressively traded here to get the price to move again?
Well, so the big difference I see from this post-halving peak, so let's just call the post-halving peak just under 70K from November, because that works out timing-wise from the halving. So let's just say that's the post-halving peak. What's different about this drawdown from the post-halving peak versus the last two that we saw, which were the first run up to about $1,000, and then the next cycle peak was $20,000, and now this cycle peaks are almost $70,000. So the difference between this one and those two is that the on-chain accumulation, I don't really, there's not a lot of on-chain metrics that I like. I think a lot of them just follow the halving timings, so I think you're better off using halving timings. But the on-chain that I do like to look at is what's going on with accumulation, right? So by that I mean what the BTC that's being taken and putting into wallets that really are HODL wallets. They don't move much. Okay, so that's continuing to grow, which is a lot different than the previous two halving cycle peaks, where we saw BTC going back to exchanges and being converted back to fiat. So that's a huge difference. And that's why I lean to maybe we have a more truncated bear cycle, if you will, just because that metric is still continuing to be bullish. It's just a very laggy metric. So in other words, it's not something that's going to directly correspond to price action right away. But I would look at it more as that this cycle is going to be a lot different probably than the previous two boom bust cycles that we saw, that everyone, there's so much comparison to those cycles and how the expected price action of Bitcoin is going to play out. So I think given that detail, I think that's a huge difference in what happens going forward. So I think that's going to be as long as that maintains that bullish look where the accumulation is not stopping, then I think we're looking at a shorter drawdown cycle, and we're going to see higher highs a lot sooner than previous cycles.
Good. And Phil, we have like 5 or 6 minutes left here. I'd like to, maybe if you could break it in half, maybe give the folks your thoughts just generally on the alt market. Maybe in a future podcast we could dive into deeper as to kind of what you see as good investments other than Bitcoin. And then also I'd like to get your sense for your personal view of the NFT market, and has that boom busted, or is it also in a phase where we'll see another round of higher investor interest?
Okay, yeah. So with regarding just alt projects, I think it's maturing. The one thing that we do have to be cognizant of is the reason why we had such a bullish 2021 for altcoins. It was that you have to look at how much liquidity was introduced into all markets, and that was a function of the Fed hitting the panic button from COVID and looking. I mean, if you just look at like the M2 supply, which is your measure of circulating dollars in the system and savings accounts, checkings accounts, institutional accounts, that thing went parabolic. So of course markets, I mean, it's the universal law. If you're going to do that and pour that much liquidity into the system, every market's going to go up, right? Housing, equities, and, altcoins, highly speculative things, especially, will see crazy moves. So I think you have to go forward looking and say, okay, well, now the Fed's getting very hawkish, right? And looking to pull liquidity out of the system. Well, I don't think when it comes to things like altcoins and NFTs, I think you're going to see those get hit the hardest, especially projects kind of like that were very speculative. Like there's some really good blue chip altcoins, and like you said, we can get into that in future podcasts. So there are some definite legitimate contenders. I think DeFi has come of age as far as being something to build on going forward. It's not going to fizzle out. And so I think the sectors in alts that are going to be players are going to be DeFi, NFTs, gaming, get paid to play, right? So I think those are sectors you gotta really look at as the most potential for returns on your investment. As far as NFTs go, I think they're here to stay. I think older people, and when I say older people, just people older than millennials, I think are probably get it, but have a hard time wrapping their head around the fact that a picture of a rock sells for 6 figures plus, right? And I think the NFT concept is here to stay. I think where it's going to evolve and probably find a longer term model is going to be where it's tied into the real world more. So maybe things like events and things like that, where an NFT that you buy is transferable, but it's used for things like maybe lifetime backstage passes to a band or something like that, right? Something that's material. And I think over time, that's probably where it goes. I'm sure there's still going to be, JPEGs and GIFs and things like that are sought after. But I think what we have to realize is that the younger generations, millennials and younger, they've grown up digital, right? My kids, they've grown up with touchpads, right? I remember my 4-year-old first time she's not 4 anymore, but at the time she was 4, she saw my mouse and she's like, "What's that?" And it dawned on me, like, these kids grew up on touchscreens, right? Which growing up, that was like, so advanced, a concept like that. So I think NFTs are just going to be part of people's, what they are used to and what holds value. So the older generations will have to adapt to that thought process because the younger ones are going to drive that forward. But I think NFTs as a new asset class, like most new asset classes, are going to go through a boom bust cycle. So I think they've boomed, and I think you're going to see a similar drop off to what Bitcoin saw in the previous two retail driven cycles. So retail tends to adopt these things rather quickly and shoot them up, and then they drop off, and then you'll see like bigger money start to play over the longer time horizon with them. So I do think NFTs have a lot more to go on the downside, especially with liquidity probably coming out of the system from the Fed's actions going forward. But over time, I think you have to keep an eye on that space. And like I said, I think you have to look at where it ties into the real world. And I think those plays over time will pay dividends. So I think that's where we're at currently with that stuff.
Oh, good. Well, thank you. Hey guys, we try to keep these podcasts under 30 minutes, just, so we don't just bog you down with just long-winded, conversations. But this was fascinating for me. Phil's a wealth of knowledge, and, in the future, when I put in these podcasts up, I'll always put Phil's name in there so you guys know that he's part of the conversation. And in future videos, we're definitely going to talk the alt market. We'll also talk what I would call in the real world crypto markets, like what's going on with Mara and Riot and ANY and crypto.com buying Nadex, and how this world is merging. We're going to discuss that too. And then we're also going to spend time in, because I think with the world getting so crazy, Phil give his perspective on the Forex market and how he trades it in a very tightly risk-controlled environment, through the binary option marketplace. And then finally, we'll let Phil loose, talk a little bit about, in the futures market, order flow and levels, and how use market structure to become a highly effective trader. So stay tuned. We have on standby. We have a lot of really cool things that are going to help you make a lot of money over time. And I really appreciate you listening today. And Phil, thank you so much for joining me today.
Yeah, no problem. Glad to be here.
Great. See you later, guys. Bye-bye.
See you.